Chandler saw a huge drop in monthly inventory. So what does that mean for you as a buyer or a seller or just a homeowner in Chandler? My name is Scott Wynn. I'm with the Wynn Negan team at Neo Home Loans, and I share with you the big picture as well as the details on each area of the real estate market in the Southeast Valley in Phoenix, Arizona. Today I'm covering Chandler, Arizona for the month of February 2023 with the help of the data coming from Christy Kinney with K2 Homes and ProSmart Realty. So let's jump in and talk about what's going on in Chandler, Arizona. Currently, we're experiencing a balanced market. As you can see here, I like to get an indicator of what things, individual metrics are and whether they're hot, cool, or balanced. So first of all, months of inventory, which is how I started the video, we saw a 26, almost 27% drop in available homes on the market, currently sitting at 1.9 months of inventory. We'll dive into that here in just a moment. We're seeing homes sit on the market for about 75 days. That indicates that we're in a somewhat balanced, maybe on the cooler side of a balanced market. We're at about 221 sales last month in Chandler with a median home price of $480,000. We're currently experiencing a 97% sold to list ratio. It's fairly balanced, maybe a little bit on the cool side, but currently that's where we're at there. Seller paid closing costs. 49% of homes sold in Chandler last month had seller paid closing costs with a median amount of $10,000 in seller paid closing costs. We'll talk a little bit about how we can maximize the use of that as a buyer here when purchasing a home in Chandler. Mortgage rates are up over the last month or so, up 0.5%, and so that definitely creates more of a cool market. But let's look at each of these in detail. So first of all, months of inventory. The amount of inventory really gives us a good idea of where the market is and whether we're in a balanced market, a seller's market, or a buyer's market. 4 to 6 months is considered a balanced market. So being that we are well below that at 1.9 months of inventory definitely makes it a hot market. As you can see here, inventory kind of peaked out at 3.9 months and we're down to 1.9 months, down 0.7 months from last month. So definitely starting to see the market pick up a little bit and seeing less homes on the market because those homes are being sold and we're not getting that replaced with new inventory by sellers. So let's take a look at days on market, currently sitting at 74.7. I find this to be a little bit of an interesting metric just because of the fact that there is so few homes for sale. So from a supply side, we don't have a lot, but yet those that are sitting on the market are sitting a little bit longer. What I think I have found is that homes that are priced well generally sell quickly. But if people are expecting, sellers are expecting that they're going to be able to get what they got back in 2020 and 2021, that's just simply not the market we're in right now. However, with less homes on the market and if rates drop and buyer demand returns, yeah, maybe we'll be able to demand some higher prices than we have here in the recent 3 to 6 months. With that said, activity of sales is increasing. Again, we kind of leveled out here for a little bit, increasing a little bit. We'll have to see what happens here in March, but right now up 37 closings from last month from 184 up to 221. Median sales prices, I think, have started to level out a little bit. We definitely saw a drop from the peak. We're sitting at $480,000, down $5,000 from last month. But again, as sales pick up, as inventory drops, as buyer demand returns, we can expect that median sales prices are going to go up. Now, I'm not a real estate professional, I'm a mortgage professional, but I do like to stay in tune with what's going on in the real estate market because it helps me serve my clients better to position their mortgage financing and the best solution for them when entering into a particular market. And so one of the things that plays into that is this sold to list ratio. What we see here is when a seller lists the property for sale, how much does it actually sell for? Well, currently in Chandler, they're getting 97.3% of what the original list price was on the market. We're starting to see an increase from where we were over the last couple of months. We're up almost 0.5% from last month, but that still gives a lot of room for available opportunity for buyers to negotiate with sellers currently in the market. And we're seeing that also with seller paid closing costs. I find these metrics quite interesting. 49% of sellers gave a seller concession on the closing. They gave a median amount of $10,000. So they are not only getting a lower price than what the home was listed for, but they're also getting assistance from the seller to cover closing costs. can you maximize the use of this? Well, one of the ways you can do that is by using this money to do what's called a temporary buy down. A temporary buy down allows you to buy down the interest rate for the first year or maybe even 2 years by 1 or 2%, keeping that payment a little bit lower and stair-stepping into a higher payment over time because of the higher interest rates. So speaking of interest rates, what are they doing? Well, currently they are up, but they are forecasted to go down. And with the fact that they are going to be going down, there's some opportunity to be had here. And here's the opportunity. Right now, the buyer demand has not returned. Sellers are selling for less than what they listed the home for, offering concessions. There are more homes on the market now than there will be when the buyer demand returns and everybody's trying to buy the same homes on the market. And so one of the things that we're offering to our clients right now is a certainty guarantee that allows you to buy a home now with current interest rates, possibly using the seller paid closing costs to use a temporary buy down to keep that payment more affordable. And then what we will do is we will do a no-cost refinance for you within 2 years after we see those rates drop. We do fully expect the rates are going to drop because rates are generally tied to inflation. If we look historically, rates always follow inflation. As inflation drops, so do mortgage rates. And the Fed is doing everything they can to reduce inflation right now, which is why we can expect rates to drop too. I would suggest that probably summer to late this year, we're going to see rates settle in the mid-5s. And when that time comes, being able to take advantage of a refi rather than trying to enter the market with everyone else at the same time is a much better strategy. And we can do that with our certainty guarantee, so you can take advantage of prices now, negotiation willingness on the seller side, and then secure a lower rate when that time comes when rates drop. So that's the Chandler market update. We do offer market updates for the entire Southeast Valley, including Chandler, Gilbert, Mesa, Tempe, Queen Creek. So if you're curious what your particular zip code looks like, your particular city looks like, let me know. Happy to send you a market update. Thanks for watching, and we'll talk to you soon.